The Tale of Coca-Cola Dividends, 50 Years of Payout Growth. For over a century, the Coca-Cola Company, NYSE, KO, has been synonymous with refreshment, global brand dominance, and, perhaps most importantly for investors, dependable dividends. With a staggering 50-plus years of consecutive dividend increases, Coca-Cola has firmly cemented itself as a dividend king, a title reserved for companies that have raised dividends for at least 50 straight years. In this article, we will explore the history of Coca-Cola's dividend growth, why it has been a haven for income investors, and whether it remains a strong investment for the future. The history of Coca-Cola's dividend growth. Coca-Cola's dividend-paying journey dates back to 1920, when the company first started rewarding shareholders with payouts. However, its legendary streak of annual dividend increases began in 1963, and it has continued uninterrupted ever since. That's more than 5 decades of rewarding investors, a remarkable feat that only a handful of companies in the world have accomplished. The early years, laying the foundation. Throughout the 20th century, Coca-Cola expanded aggressively, growing its brand recognition across the world. The company's ability to generate consistent revenue from its flagship Coca-Cola beverage, as well as its expanding portfolio of drinks, gave it the stability to maintain and grow dividends. By the mid-20th century, Coca-Cola had firmly established itself as a staple in the portfolios of conservative, income-focused investors. The Buffett effect. Coca-Cola as a dividend powerhouse. One of the most famous endorsements of Coca-Cola as a dividend stock came from Warren Buffett. Through Berkshire Hathaway, Buffett made one of his most successful investments by purchasing a large stake in Coca-Cola in the late 1980s. Buffett's philosophy centers around buying high-quality companies with strong brand loyalty, pricing power, and the ability to return value to shareholders. Coca-Cola checked all those boxes. By investing in the company at a time when it was undervalued, Buffett reaped extraordinary returns, not just in stock appreciation but in dividends. Buffett's long-term holding has been an excellent case study in the power of dividend reinvestment and compounded growth. Today, Berkshire Hathaway earns hundreds of millions of dollars annually from Coca-Cola dividends alone, and Buffett has referred to Coca-Cola as a cornerstone of his portfolio. 21st century growth. Adapting to market trends. Despite its dominance, Coca-Cola has faced challenges in the modern era, including shifting consumer preferences toward healthier beverages, regulatory scrutiny over sugary drinks, and increased competition from non-carbonated drink brands. However, the company has adapted by expanding its product line to include bottled water, sports drinks, teas, and zero-sugar sodas. Even in the face of these challenges, Coca-Cola has continued to raise its dividend, demonstrating its financial resilience. Investors have benefited from its ability to generate consistent free cash flow, which fuels its ability to sustain and increase dividends. Understanding Coca-Cola's dividend metrics. For dividend investors, it's crucial to examine key financial metrics to understand why Coca-Cola has remained a strong dividend stock. 1. Dividend yield. Coca-Cola's dividend yield has historically ranged between 2.5% and 4%, making it an attractive choice for income investors. As of recent years, the yield has hovered around 3%, which is higher than the average S&P 500 dividend yield. 2. Dividend payout ratio. The payout ratio is a key metric that shows how much of a company's earnings are paid out as dividends. Coca-Cola's payout ratio has typically been around 70% to 80%, which is relatively high but sustainable given the company's strong cash flow. A high payout ratio means Coca-Cola prioritizes returning cash to shareholders rather than aggressively reinvesting profits into new ventures. 3. Dividend growth rate. Over the last decade, Coca-Cola's dividend growth rate has averaged around 5% per year. While this growth has slowed slightly compared to previous decades, it still represents a strong commitment to increasing shareholder value. Why investors love Coca-Cola's dividends. Coca-Cola has remained a beloved dividend stock for multiple reasons. 1. Consistency and stability. Few companies have demonstrated the same level of consistency as Coca-Cola. The ability to pay and increase dividends for over 50 years proves that Coca-Cola is resilient through economic cycles, including recessions, inflation, and global market downturns. 2. Strong brand and pricing power. Coca-Cola is one of the most recognized brands worldwide. Its strong brand equity allows it to maintain pricing power, meaning it can pass on increased costs to consumers without significantly hurting demand. 3. Reliable cash flow generation. The beverage industry, particularly non-alcoholic drinks, tends to be recession-resistant. People continue to buy beverages regardless of economic conditions. Coca-Cola's global distribution network and diverse portfolio ensure strong and reliable cash flow generation, supporting its dividend payments. 4. A dividend aristocrat and dividend king. Coca-Cola holds both the dividend aristocrat and dividend king status, reinforcing its position as one of the most reliable dividend stocks in history. Few companies reach the 50-year milestone of consistent dividend hikes, and Coca-Cola's ability to do so makes it a unique asset for income investors. Is Coca-Cola a good dividend investment today? While Coca-Cola has been a fantastic dividend stock historically, is it still a good investment today? Here are some considerations. Bull case for Coca-Cola. Resilient business model. Coca-Cola remains a global leader in beverages and continues to adapt to changing consumer trends. Dividend dependability. The company is unlikely to cut dividends due to its strong cash flow. Emerging market growth. As Coca-Cola expands in emerging markets, it has more opportunities to drive revenue and sustain dividend increases. Stock buybacks. Coca-Cola continues repurchasing shares, which enhances earnings per share and supports future dividend growth. Bear case for Coca-Cola. Slow growth. Compared to high-growth stocks, Coca-Cola's revenue growth has been relatively modest. Regulatory and health concerns. The increasing push for sugar taxes and health-conscious alternatives could challenge traditional soft drink sales. High payout ratio. With a payout ratio around 75 to 80%, Coca-Cola has limited room for aggressive dividend growth without boosting earnings. Conclusion. A timeless dividend icon. Coca-Cola's track record of 50-plus years of dividend growth makes it one of the most iconic dividend stocks in history. Its ability to generate steady revenue, sustain cash flow, and increase dividends through various economic conditions cements its position as a go-to stock for income investors. While Coca-Cola may not be a high-growth stock, its stability, brand power, and commitment to shareholder returns make it a cornerstone of a strong dividend portfolio. Whether you are a long-term investor looking for passive income, or someone seeking to build wealth through reinvested dividends, Coca-Cola remains a compelling choice in the world of dividend investing.